I think what we're going to see in the second half of 23 and all of 24 is a lot of medicine being taken, a lot of down rounds, a lot of structure. It's going to be a tale of two cities. The hot area, AI is going to continue to receive new investment, and all these companies that, that receive peak valuations in 2021 are going to have a day of reckoning. Either, if they're lucky, maybe they have a flat round or modestly up round, but a lot of them are going to have down rounds or restructurings. And that's just going to be going on for the next year and a half.
What's your philosophy, Sachs, on leaving a board? This is a really dicey issue. When you give up on a company, what's the best practice there? How do you do it without damaging the company? Obviously, the founder relationship is going to be hard. What have you learned about this as a private market investor?
Well, I think that sometimes we flip board members internally at Kraft just because people have different amounts of capacity. That's not a statement at all about the way Kraft feels about the company. It's just a reflection of our individual bandwidths or whose expertise are needed at that time. But when the firm itself quits a board, I think there's no way to read that other than a statement of protest. And I don't know what happened at that company, but it seems to me that, again, it could be a sign that the venture firm isn't happy with the way that they're being treated.
The cram down, Chamath, that's a bitter pill to swallow. Why would founders do this cram down instead of just adding a little more to the top? And is there a way to do this without, going scorched earth or poisoning the well, as it were? Again, putting this app and Sequoia aside, this is happening all over the ecosystem. So is there a way to do this gracefully, or is it just going to be messy?
I think it's going to be really messy. I mean, to state the obvious, no venture capital investor ever quits the board voluntarily of a great company that's doing well. That would be dumb. So as David said, sort of like the proof is in the pudding there. And at the same time, there are a lot of companies who don't want to see the writing on the wall and will do all kinds of gymnastics to try to stick a landing on a contorted financing. And sometimes those things have real consequences to other investors who just don't think it's the right thing to do. I wouldn't read too much into this, except that good founders have a responsibility to do what's right for themselves and their employees. Nobody else. And the thing to keep in mind... Not
the investors, really?
No, I think you absolutely have to prioritize the people doing the actual work. And if you actually did prioritize them, what you would probably say to yourself is, oh my gosh, there are people who I work with, who I look in the eye every day. Because investors you'll see once a quarter. But I have my fellow employees as a founder, that I look in the eyes every day, who've been toiling with me for umpteen hours a day, every day for years. And they are now totally underwater. What is the right thing to do for them? And I think if you just answer that question, you wouldn't do all these contorted things. You would just reset the valuation. You would refresh the equity pool. You would issue options back out to those employees, and you would move on. It's all these other things that get in the way of answering that simple question where people fuck it up.
I've done that before.
Sachs, if you don't have a team and you don't have a motivated team, you have nothing.
I've done that before. I don't want to rehash one of my more miserable experiences, but I was dealing with a company that had a grossly inflated valuation. It was a total problem case. We voluntarily slashed the valuation in half and reissued options to the employees to keep them motivated.
No big deal.
So yeah, exactly. And
it's not that it's no big deal, but it requires some amount of fortitude and understanding your priorities, I guess.
Well, Chamath, that's it.
What do you think? Yeah.
First, I think it's revealing that we think what happened here is so out of the ordinary. I mean, you flash back to 2001 to 2004, Sequoia, I don't think funded a single loser in their portfolio, right? That's a time where you walked away from the ones that weren't winning and you fed the ones that were, because you have limited capital and you don't know when you're going to raise your next capital. This idea that you have unlimited capital, you can give money to anybody no matter what they're doing with respect to their plan, I think is a function of the last 10 years. But to Chamath's point, the idea of tough talk, either out of CEOs or out of board members, has been in short supply in Silicon Valley. This idea that saying the truth, just speaking the words about needing to get fit or needing to lower the valuation, that somehow that is founder unfriendly is nonsensical. The truth is founder friendly by definition. And I think to Chama's point, the less complicated you make this, right? You reset the valuation, you re-up the option pool, and then everybody has a choice to make. And if the people who are on the board and backing the company choose not to re-up for whatever reason, they no longer believe in the path forward for the company, that's incumbent upon the founder to go find people who will.
That's not abandonment as it's being framed in this story. It is a trade. And I think maybe if you look at public market investors, Brad, nobody gets upset by a trade. Trade's a trade. But in the private markets, there's a lot more emotion involved, a lot more relationship material, and this founder-friendly concept of like, you're abandoning me. It's like, no, the trade here, it makes no sense for this firm and for this fund and for these LPs, right?
And sometimes the founder needs to have the courage to look in the mirror and say, what I'm doing is not working. I had a plan. I missed the plan by 70%. I'm lighting capital on fire. This is a charity, not a business. It's best to say it didn't work, shut it down and move on and do something else.